If you want to check it out, it's like an organization, it's like weactuallysays.com, and it's an organization that it's very kind of, I would say, it's for the members. So the members tell us what they want to hear and we'll do the event. So everything is free and you have a say, which is the opposite of everything else. When everything is not free and you don't have a say, which I think is bizarre. Talking about money is something that people always like to hear on those things. And we had Jane before, and Jane was probably one of the best speakers. I think when you're a global MD and Gary Cohen. Yeah, and then it was about salary negotiations. And her tips on salary negotiations are still with me, and they work. So if anybody wants to talk about after, I still remember I still remember the numbers, trying to find out the numbers. Yes. So Jane has a new venture which she's going to talk to you all about, but she's going to talk about a bigger picture thing as well. So I'm not going to take any more time. Take it away.
Thank you, Ali. And also big time for Ali. You do so much for this community. It is, I mean, it's an amazing global thing. It's been created.
Australia in the house.
We've got more Australians in the house. But thank you. It's amazing. So I'm going to tell a few stories, a few things that I've learned along the way. But like Ali says, I think it's better to open up questions. I mean, there's two sort of very distinct camps. It's like, you know, working. Like we all work really hard, and the end result of that is money. And then what we do with it kind of dictates the options we have in life. And, you know, I encourage everybody to tell their money story. It's not an easy story, even if you just now start thinking of your own money story. The more that people talk about money, the less fear and shame and guilt. And just like you get into crap situations. You go out for drinks with your colleagues and you think, oh my God, I'm already at my credit card limit, not knowing that everyone else at the table is too. And so you all should just be getting a bottle and just drinking it by the river. That's what I do instead. But I'll tell you a little bit about my money story, which definitely overlaps with my career story. I met Kirsty here today, who's visiting from Melbourne. We went to the same, she's still in the same course that I studied in Melbourne, Australia. And I had decided when I was, I think I started this when I was 17, that I was going to run a Madison Avenue agency. That was my career goal, right? I'm going to do this. And then, of course, plans never work out the way you think they're going to work out. I won't bore you with all of the journey, but I was very fortunate to have terrible missteps along the way that actually got me to running a Madison Avenue agency. So I was the president of Young American here probably 7 years ago. And then it's the careful what you wish for, because sometimes when you actually achieve your career goals, you're like, it sucks. Oh my God, why did I think this would be a good job? Anyway, but I was very fortunate. I left Australia quite young. I was transferred to Malaysia, of all random places, as an account director. I think I was in my mid-20s. And I spent 7 years in Asia. And this is sort of a fundamental part of my money story, because as an Australian, we're very much like American, Western European, in that money's generally not talked about, right? Within your families, within your friends, especially not within your families. But, you know, money is something that you work really hard and you earn it, and you earn as much as you can, and you make good decisions, and you'll be fine. And in the last 20 years, the world has changed, and the world has changed substantially. Like, how many people are full-time, hands up, and then contract 1099, okay? And that's about, like, 40% of millennials are 1099 workers, 30% of the overall population. So the world is still built for people on a salary with health insurance and 401ks, but very quickly, now as an employer, I love the contract economy. It's amazing. I don't have to hire everybody. But in any case, as an Australian where you didn't talk so much about money, I arrived in Asia, and literally on my first day in KL, someone said, "What's your salary?" Oh God. And I was just so shocked. I made some joke and walked away. And the next day, "What's your salary? What are you earning?" I said, "This is so weird." And after a week of people asking me how much I earn, I said, "Do you know, like, can you tell me what you earn?" And they're like, "Oh yeah, I earn X." I was like, "Wait, does everyone know what everyone earns?" And they're like, "Yeah." I was like, "Are you kidding me?" And then, so what was very confronting at the beginning of my time there ended up being truly formative, because all of a sudden there was no weirdness. You knew what people were earning, you know, if they got a bonus or not, you know, how much they're paying for their apartment. And, you know, I would have an auntie at the ground floor of my building say, "Have you got a raise yet?" You've been there too long. Have you got your raise? I'm like a lucky random person. But it's actually kind of great to have someone keeping you accountable. Right? It's like, oh, who knew? So I arrived in the US, and one of the wonderful things about Asia is, property is expensive, and so I'd started investing, thinking that was normal for someone in their mid-20s. So I bought some stocks, and sold some, and bought some more, and by the time I arrived here, that was my way of saving money. I sort of put the money into investments, and it grew and grew. I transferred them over here. And I would say to my colleagues, so I got transferred with Euro, which is now Moss, but I was with Euro for 11 years. I'd say things like, I'm thinking of buying more Apple stock, what do you think? And I'd get this weird side eye. It's like, I was like, what do you mean you don't do that? And I very quickly found that you don't talk about money here. Nobody talks about money here. And so not only did I lose my people and source of ideas, it became sort of my personal mission to talk about money and to talk about my story, and basically to say I was as clueless as everyone. I graduated with $50,000 in student debt. I had no idea about exchange rates. I moved to Malaysia and took a local salary. The currency crashed. I'm like, oh my God, I'm so poor. So there's a lot that you learn along the way as an adult, which again, I learned the hard way, and I was trying to, I'm going to help people learn this the easy way. So I would give this very impassioned speech to basically like people like you. I was always agency people. I was always in agencies, apart from a few sidebars into client side. And I would say you know more than you think you know. In fact, you know more. I'm going to guarantee everyone in this room knows more about their clients and their clients' prospects than most Wall Street analysts. You know the people, you know their plans, you know if the people are good, you know if the plans are good, we're doing a job. But I would give this very impassioned speech around just go home and buy a single share. If you think your client's onto something good, and this is also a total pro tip that works beautifully, you go buy a share of your client's stock, and you can say, I'm not saying this is your agency partner, I'm saying this is a shareholder. It's freaking out. Just like, oh my God. You say, in your last annual report, your CEO said this, and you could say, oh my God. Anyway, so but having all of a sudden exposure to a whole different side of the business, that's what you're in business for. You're in business to, sell product, and it's not just to sell product to make sales. Businesses exist for shareholder return. A private company, it goes to the owners. A public company, shareholder return, it goes back in the form of growth or dividends to the shareholders. It's a very simple exchange. And so, when you bring that back to your own personal economy, it means that you work really hard for your money and you give it to these companies, right? For your phone and your food and your clothes and your shoes and all of the things that you buy in the world. And they work hard for your business, but their primary responsibility is their shareholders. So as long as you're not investing, it's a linear flow of money for your whole life. I know it's depressing, it sounds like. But if you can think of it, it's like I'm putting money out into the world. Let's see how it comes back to me. I mean, no one ever says they're not a savvy shopper, right? You know that nightclub effect. What brands are on their way up, what brands are on their way down, right? And it's exactly the same in investing. That sort of momentum works. So having failed with my plea of you just have to get started investing over and over and over again, because the one thing I didn't realize, and I mean, I worked on the Talk to Chuck campaign for Charles Schwab. I worked on the inaugural branding campaign for Goldman Sachs. I worked with Citibank in 3 different countries. But even having been at the table of these financial services institutions, there really isn't this sense of how do we bridge the gap? How do we bridge the gap from people who are just living paycheck to paycheck, paying your bills, if you're lucky, saving a little, into this wonderful, happy world of wealth management, where someone gets to come in and manage your wealth for you. And, if there's one thing I've learned, is that the world really is kind of divided up. You are, and it's this side, the people who are living paycheck to paycheck and paying overdraft fees and paying high credit card fees, is basically subsidizing the other, subsidizing the high net worth. It's kind of insane when you break down the business, and as Ali says, that's one of my absolute passion points. Is always follow the money, whether it's in your career or whether it's in the companies you're working for. Who's paying who? What are the profit centers? And just figure out where you fit in all of this, but making it personal to you, right? You invested in a college degree, maybe not. You invest most of your waking hours thinking about work. You make discerned decisions as a consumer. And then money, right? So my incentive to start GoldBean was basically because I would send people to Charles Schwab and say, go, you know, open an account, buy a couple of shares, spend what you would have spent on dinner, you can do that. And I would get the feedback that I feel really stupid, it's really intimidating, what's a risk profile, what's a margin account, do I need one? It's like, through the eyes of a beginner, investing is horrifying. It's really, truly, and it's designed to be horrifying because there's an army of people get paid based on your ignorance. But that was so somewhat, you know, it's not a funny joke, I find it funny, but you know, GoldBean to me is somewhat penance after spending 20 years taking money out of people's pockets. Like finding a way to help people keep money in their pockets and actually grow is what, you know, that's my passion point. And I mean, I love brands and I love this community and I love advertising still. And I love the fact that as an educator, so to speak, the advertising community has educated people from birth on companies and brands. Like, you know more than you think you know, you really, really do. So let's just leverage that and transform it into a portfolio opportunity. And so I won't talk too much about like my business in particular, but I have married like my love of brands with my love of investing and basically help people get started with their first portfolio. That's what we do. So you show me where you shop, you don't have to, but you can share your consumption data with me and I'll see if you shop at loser companies or not. If you shop at you know, companies that are actually good investments and then build a portfolio, which is a couple of funds and a couple of stocks, we say you can start with zero, just come in and learn, just get comfortable with the fact that, you know, you can now have this thing that's like enforced savings on the side and grow over time. And I think that's kind of, you know, the core of what I do every day, but it's kind of the core of what I want to talk about is, you know, going from a consumption mindset to a growth mindset. And if all families grew up with this wonderful, and I know I certainly didn't, I was one of 8 kids, my dad worked multiple jobs, so there was the only money discussion in my house was there ever going to be enough, okay? But if there was family discussions around, it's not just about earning and saving and sticking to a budget, but you've worked so hard for this money, grow it, put it to work for you. And that's the missing part of the conversation that we're really sort of dedicated to solving at this point in time. But like I said, there's somewhat penance to pay. But I did want to share a few things that I've learned on this journey from being, you know, I thought I was really stressed as an agency person. So much harder, like Bridget, to start your own company. But having worked, and I work with clients every day, you know, we've done a lot of user testing, we get a lot of feedback around what people need and don't need. We had started the business based on the assumption that it wasn't necessarily, you know, money holding people back, it was confidence, right? Because there is this big opaque wall in front of money that says, trust a professional, talk to an advisor. I worked on those campaigns, I know exactly that sort of paternalistic tone. But having this assumption that, you know, people just need education and practice and, you know, eventually over time you can learn and just drip feed education, and we still subscribe to that. But I think our biggest finding was that it was actually debt, and the fact that most people carry debt of some form, whether it's student debt, mortgage, credit card debt, auto, like there's a lot of debt, and you know, debt is leverage. You take out money to invest in your education or a house or whatever it is. But debt has also become a sinkhole for many, many people, that once you get into that bump up against the edge of the credit card and then they give you a little more credit, a little more credit. And I mean, the stats really are horrific. If you don't know, it's like every second household in the US is basically in credit card distress with an average of 15,000 outstanding. That's crazy. So now you can benchmark yourself. But it's like, so the 15,000, but that means, and people in the upper, and I know there's high earners in this room, it's basically the high earners that carry the most debt and pay the most interest. So there's the average, people who hold credit card debt who earn over 150,000 a year are paying 5,000 a year just in interest, right, for not paying it down. And so we've really, you know, unpacked what we do. It's like, I mean, the credit card kind of is at the center of our business because that's where we look for people's data points. But it is amazing just to see the transformation from people who weren't necessarily paying down debt. And that's always our, you know, there's an immutable law of debt is to pay off your high interest debt idea of, you know, understanding what your number is makes you much more powerful when you go to negotiate. Because guess what? Every extra dollar is going directly on what everybody earned. And I got to tell you, it is not related to talent at all. Zero. It's related to squeaky wheel. It's the people who are, and it was always the dudes in my office who were just like, I need a raise, and these are all the reasons why I need a raise. And they're like constant. And then I would do performance review with amazing women, and they'd be like, great, thanks. And I'd be like, did you forget something? No, that's great. It's like, you have to ask for more money. And I'd always tell them, like, every guy is in here telling me why they should double their salary. And then I'm going to be like, oh, I was going to send you an email later. It's like, no, you ask for more. Like, you're working really damn hard for this money, so ask for more and understand what everyone else around you getting, and assume that the least talented, whiny people are getting paid more than you. It's generally true. Sucks.
I need to drink.
Again, I do a whole course on Linda on how to ask for a raise, so that's another whole long conversation. But there is homework that needs to be done. If you just march in the morning and say, I want more money, you're just the same guy. You've got to make the case, you've got to know the numbers, all of those things. But I think there is just sort of the final thought I want to leave you with, and I kind of hinted at it before, in that the world really has changed. Everything from the way we communicate, the way money is coming in, the way money's flowing. It's definitely, you know, I feel like the baby boomers got, like, there was one generation that kind of had it sorted, right? Fucking boomers. Where, you know, they had great social services, they had great opportunities, there was a lot of jobs. Unfortunately, the people in power are still those boomers, and so they really can't get their heads around the fact that, you know, it doesn't kind of matter how old you are now, the default mode needs to be hustle, right? Hustling for your next job, hustling for the more money, hustling for, you know, some money on the side. And, you know, if you're not thinking about the side hustle and the default mode being hustle, you know, in the agency world, everyone gets fired. I got fired a bunch of times. It happens. It just, you know what, it's generally nothing to do with you. It's just this is the way agencies work. You lose a client, you got to lose 30 people, right? You know, a new boss comes in, yeah, I'm going to bring in all my own people. Like, it doesn't matter how hard you've worked, and frankly, the more senior you go, the more susceptible you are for that. So, all of a sudden, when that day comes, you'd be really glad you have some investments on the side and some side hustle income coming in. And, you know, this idea of, you know, understanding the money will actually make you better at your job. And bear with me on this, but like 83% of HR managers said people's personal financial issues severely impact their job performance. If you're worried about paying your bills, if you're worried about, oh my God, I have to get this extra, you know, I have to get this extra raise, or else, you know, I'm not going to be able to get the kids' school fees or whatever, like, how can you be your best self at work, right? Screw you, Sheryl Sandberg. You can't lean in and put your hand up and say, I'm going to do all these things. If you're worried about getting fired, you just can't. And I think that's a human truth that comes from a very privileged place to say, just put your hand up for more work. It's like, okay. But, you know, again, every second household is struggling with credit card debt. So that puts it into perspective of, you know, this is the reality. And then you can flip it and say, just think of the opportunity. If you do have financial health and financial security and confidence, you can tell a skeevy boss to shove it. You know, you can leave a bad relationship. You know, you can look actively for a new job without worrying about your boss is going to find out and fire you. And, you know, that's the story about money and growing your money that no one really talks about, but it is directly related to your confidence at work and to how you can really be true to yourself and be your, sort of live up to your full potential. So, you know, investing in yourself from your career perspective, it's a wonderful virtuous circle. You can move up, earn more, explore more, have more adventures, whatever it is your goals are. But there's also this sense of, now you have another skill. Now I'm good at money, right? And it was to my horror, I guess, where I thought I was really good at money, having worked for a financial services company, having been in investor. And then when I went through the process of being registered with the SEC and becoming a registered investment advisor, I have a fiduciary duty to all of my clients to act in their best interest. I realized I knew nothing. Right? And all of those people that you see on TV who have a book and how to do this, they're journalists. And so it's like, oh my God, I didn't actually understand the depth of the responsibility and the accountability. But that was the thing that I invested in myself. I didn't have to go through that. I could have outsourced that to someone else. I'm very glad I did, because now I have another whole skill set. And it's something that, I'm seeing more and more amongst sort of early 20s people of, I'm an archaeologist and a coder. I'm a writer and a photographer, and it's just sort of like the slash generation, but it's multiple income streams. So if that's drying up, I can do more work over there. And I think it helps everybody. I say Lynda is my side hustle. Like, lynda.com pays me to do these videos. It's great, I don't pay myself as an entrepreneur, which sucks, but it's a great way to think about what would happen if your salary went away tomorrow, or your contracts went away tomorrow. Where's this money going to come from? And all of a sudden you get a whole lot more resourceful. And investing is frankly the easiest, I'd say, way to grow the money that you have. And it didn't just the final story, but it didn't really hit home to me when, I'd come to New York with basically a deposit for an apartment. That was my, I've got this pile of money, I'm going to put it on a New York apartment. And then for 2 years, look for a place. I'm like, why would I spend this much money? These places are awful. They're so small and dark and weird. And so I was like, just kept investing it and kept growing it, had good years and had bad years. But, over time, I've been here 13 years, over time, it turned into basically a pile of money that I could use to build this business. Take a risk. I'm going to see what happens. I can always get a job if it doesn't work. But having this sense of, I'm going to invest in myself and see what the outcome is. And when it really hit home was when I had twins. When I was at Euro, 2006. I think yeah. God, I should know how old they are. And I honestly thought I was going to go back to work. I'm going to take 12 weeks off and go back to work. And you had twins, physically revolting. It's so hard. I was destroyed. And made this decision. It's like, I'm going to sell some of this stock. I'm going to sell some of this stock, take a year off. I can consult. I assume I can get another job at some point. And that was a luxury that I did not even consider that investing would bring. Right? So it was like, it's not about some random, Adirondack chair retirement on the Jersey Shore. It's actually about buying options in life. I don't have to work for these disgusting, douchey agency CEOs. I'm sorry, there's some people. Not all of them. Hashtag, not all bosses. But, that was a great discovery. It's like, oh my God, I've got some options because I've got a base of money. And it had never occurred to me until that moment where I was like, I can't go back to work. I'm destroyed. Oh, I could do something with this. So, with that, I'm going to open up for questions. Don't ask me about giving birth to twins. Anything else is fine.
Can I start?
Go, Ellie.
Yeah, because you're saying basically being clever about your money and investing is kind of more, it's like a lifestyle thing, right? Because, let's say, if I want to travel the world and take a sabbatical, if I've invested, I can do that. So and then I remember something about what is the number one, if you're really scared, is the number one tip invest for more you know? Because I really liked your Whole Foods example.
Yeah.
Do you like Whole Foods? Do you shop at Whole Foods? Then invest, then give the people that you shop with some money and you're going to see return. So what is the number one tip?
So I'd say that, put your money where you're comfortable or even just do it virtually. I think the number one tip is if you haven't started, just start. And if you have started, know what's going on in there.
In the stock market, and this is not just for
this isn't
dudes and most.
No, this is not. I mean, and it is. I forget the Whole Foods story, but Whole Foods opened in my neighborhood right the same year that my babies were born. It's like we're going to spend so much of our money in that store because it's beautiful, and I'm never going to go out again. And I think it was trading at $5 at that point, and my husband was like, "Nah, it's small. It's never going to take off." And it went from $5 a share up to 70 or something. I mean, it's down to around 50 now. It's not even lower now, 40. But even I'm not saying you can get 6%. I absolutely can't say that, but it depends what your risk profile is. You know, if you're going to go for higher risk investments, you will generally get the higher return. But yeah, the market's always crazy, and this is like the big dirty secret. This is interest rates are bad.
Yeah, I don't know. This market is, in the past few years, it's just been really crazy. I mean, stocks go from 150 jump to 25, and they can do that within a few days.
Yeah. Because of a tweet, I know.
It's really
Yeah.
kind of, I mean, you know,
Yeah,
it's never like this.
So we never recommend just investing in a single stock. If you've got $100 to spend, put it into a fund that's a little better balanced than a single stock. But see what happens, and this is what we've found, when you're going, so you clearly know, even to know to say that, you know something about the market. When a beginner hears that, they're like, I'm not going to do anything, I'm just going to stay out.
That's how I feel.
Okay.
What am I going to do?
So, I mean, it's better, we talk about building your money muscles. It's basically building resilience and understanding what it feels like. And even if it's just a virtual portfolio, I've got 10, like on my side, everyone gets $10,000 virtual money. You put that into, maybe we tell you what to, well, we do tell you what to put it into, but you can edit it and do your own thing. You know, I hate Whole Foods and I love Target, whatever. And you can watch, and how do you feel? We say you shouldn't even check it any more than once a week, because it makes you crazy. It will make you crazy. But it's also over a lifetime, you know, this is, you start somewhere. I mean, I say I was an absolute genius and bought Apple at a split adjusted $1. Right? I sold it a year later for a split adjusted too. But I doubled my money and I felt like a genius. And honestly, I don't even regret that first thing would be worth $100,000, because that gave me the confidence to do more. Just get out there and do more. And I think that's, again, as a fiduciary, I can't give people that advice, but there is something about just getting started and taking the first steps and learning what if you're the sort of person that needs the money under the mattress, then honor that. It's really not great, you'll know exactly how much you'll have, but that's the deal.
So I love the idea of investing like a share of the company that you work for. Is that through you? Is it E-Trade? Like, where do you get started?
You can do it through us, you can do it through E-Trade. Most people will have some sort of 401k account, and often with that will come the ability to buy your own, to add more in. I haven't talked about 401ks because they are incredibly complicated, but you know, it's the biggest source of most people's savings. So it's worth checking in every couple of months and just seeing how it's performing and how much fees you pay. Because if you've got old 401ks, you can roll them into an IRA, and you can actually trade with an IRA. Again, I'd recommend way lower risk stuff like funds, but just not high cost mutual funds. But that's the deal, like if you put it into, it's a thing called an ETF, that basically there's one that tracks the market, the SPY. And if the market goes down, your ETF goes, if your market goes up, your ETF will go up, down. Like, you're not gonna ever beat it, but you're not gonna lose against it. And so that's what we'll tell people to do. Just put your money into something low cost and lower risk. And if you want to then buy a share of Whole Foods, knock yourself out.
I just wanted to build on what you're saying. Years ago, I worked on Charles Schwab, we were pitching it, and I don't know if I overlapped with you, but my partner and I, who was a woman, we came across this research that when women invest, which is not often, not compared to men, we beat the men.
Always
We
beat the men.
totally beat the men.
Every time.
It's proven.
Like intuition?
I don't know if it's intuition, I don't know if it's being more
It's
analytical.
risk. It's risk. We've got a much better approach to risk.
Yeah.
And men act with their, let's call it testosterone.
We were less reactive, we're smarter. And when we came up with the campaign, we wanted to target women, and they didn't buy it, but we're better at it, and we should be doing it.
Yeah, I mean, we do all the market research. We're out there spending all the money. 70% of the money spent in the GDP, the consumer economy, is through women. We know.
So I just have to comment on that as a place to start. I'm wondering if you've heard of the app Robinhood and what your thoughts are on that, because that's where I decided to get started, and I'm not sure about the legitimacy of it. Or
I mean, it's legit. It's just it can be very expensive to trade for free if you don't know what you're doing. So I mean, if you're just looking for something like, and that literally the difference between Robinhood and like we trade through a company called Trade King, right? So Trade King is $4.95. Every time you buy or sell something, it's $4.95. Robinhood is free, right? It sounds like a great deal. What I know about Robinhood is that it tends to appeal to more sophisticated investors who are trading a lot, so they're actually saving a lot of money. If all you're looking to do is save $20, then go with someone who's going to help you and educate you and give you some advice along the way.
I was wondering, just based on people who actually have funds, have savings accounts through 401k or IRA, whatever, if you have a fund advisor, how can you tell based on your quarterly statement that fee that advisor is, for lack of another word, deleting from your account is worthy of your money?
I love that you asked that question. So most people at some point in their life will work with a financial advisor. There's 3 questions to ask. You need to look at how long they've managed your money for, right? So don't just look about now, because they can say, well, I've made you 8%, but they're talking about the last month. And then you look over the last year and 5 years and you've actually lost money. So number 1 is always know how much you gave them to start with, right? Just how much physical money did I hand to you? Because often that gets obfuscated. Number 2 is every year, how much has just the general market performed, right? And so that means, and it generally means the S&P, right? It's up 8%, it's down 10%, it's up to whatever it is. So now you've got, I gave you X amount of dollars, here's the market performance over the last few years. And what did I do in those years? Not as an average, because when it goes up and down, it messes up the average, but all that you want to see. Oh, and then the 3rd question is, how much did I pay you, right? So you want to make sure that not only is your advisor helping you get above the market, because otherwise you just put it in an ETF that tracks the market, that costs you next to nothing, right? An advisor will generally charge 2%, 1.5% to 2% of your money every year, and it doesn't sound like much, but it really does add up. So you're basically looking, how much did I give you, how much did you take, how much would have I got if I just tracked the market, and now how much do I have? And it's a lot easier to say that than to do it. I mean, I go through clients and friends' investment accounts, and I can't make head or tail. They're 40 pages long, it's deliberately confusing. So if you actually have it,
Just from my personal experience, it seems like every 2 weeks there's a new statement coming, a new trade notice, and you're like, excuse me, I'm sorry, what are you doing up there? But I have an advertising career to maintain, and I got a child to raise, and I realized I need to just take some time and just spend an hour a week just going through these statements, and so I can email him and say, excuse me, what are you doing?
Yeah. And I mean, if you want to hear the magic word, there was a woman who inspired me to start this business. She'd asked me for years, if I gave you my money, would you manage it for me? I'm like, no, it's not that hard. You can do this, right? So you can do it. And then she gave her money to a big unnamed multinational bank, and she gave them $700,000+, and it's now worth $520,000. And if you think we can find where that money is, it's just like, and so I sat down with her advisor, and not knowing he didn't know that I was an advisor, and he was basically mansplaining investing to me, and it was like, well, because of her advanced age, she's 50, advanced age, I have to put her into like these income stuff, and I was just like, oh my God, I hate this. But literally, he was working within an inch of the law. But the law, it's called churning. If you see a lot of activity on your account, and the way that he explained it to me is like, well, because of her age, she needs to be an income stock, so we will buy a share before the dividend date, and then we'll sell it after. And I'm like, yeah, but you're charging $150 on each side, and she's making $17 dividend. Come on. So yeah, the magic word is churning, because that's a really severe accusation. It's the equivalent of being disbarred if you do that. But if there is a lot of activity, you just know someone's getting paid. All of those shiny towers in Midtown, they're getting paid out of all of your pockets. It's not some random millionaire money. It's yours.
What was that figure that you said? It was 500,000 to.
Oh, she gave them 700, probably 750, and it was worth 500. In the longest bull run in history. Like it makes, she She lost $250,000. Just gone.
Just to add to that, there was recently, John Oliver did it.
Oh yeah, it's
Oh, yeah.
amazing.
That's a great, to my attention, it made me think about fees and how common they are.
I saw that too.
Yeah, how much
That was like, are you a fiduciary?
Yes.
Yeah, like, the fact that the people who are managing your money don't, like, do they have a degree? No, maybe not. If they're an advisor, that doesn't mean anything.
Yeah.
So my question is, how do you know if it's worth having an advisor at all? From his bit, he was saying randomly choose stocks. There's been studies saying they're usually not much.
He actually used a cat.
Yeah.
Ping pong, and then they off to the cat, and the cat is better than the market.
And I'm paying almost 2% to have some, manage my money when they're really not even doing anything, and I've been losing money.
Well, statistically, they're not beating. 99% of mutual funds do not beat the market.
And
So you'd be better with just in a low cost
you know,
ETF.
I talked to my advisor, I said, let's diversify between all these different things, and I'm like, maybe I should just pull out,
Yeah.
go into a couple different mutual funds and just not pay the fee. And I'm just wondering, when you're talking about specific stocks, like having some money in all these different stocks, would you say that is better than having like a steady mutual fund?
Yeah, I mean, there's some great low cost mutual funds, but I would actually, a mutual fund means that it's actively managed, right? So someone somewhere is putting in numbers to try and maximize the returns. An ETF, an exchange traded fund, is not actively managed. It's like we've done something like, picked a theme, or we're going to track the market, and the costs on that are tiny. So, all you have to do to threaten an advisor is say, I'm going to put my money into a target date Vanguard fund, right? And that's what I will tell people. If you don't want to go and learn yourself and you just want somewhere to park your money with good returns and low cost, Vanguard's amazing. And they basically invented, John Bogle, the founder, invented this idea of exchange traded funds that were low cost, and he has an amazing segment, I think it was on, it was PBS, and it was called the retirement myth, and it was the fact that this entire industry has milked everyday Americans. He has this incredible quote that said, in what industry does the individual take all of the risk, put up all of the money, and they only get a third of the returns? The advisors keep 2/3 of the returns. Like, that's how it works. So,
What was the name of that again?
Vanguard.
It was the target.
Target date fund. So if you're at 25, you're going to need the money in 30 years. So they'll put you in something more aggressive because you've got time to grow.
I have a question. So you talked about like when to buy stock and kind of like the intuition around consumer habits. What about selling stock? Like what are some of the lessons you've learned? Like perhaps my Facebook stock that I bought in 2000.
Keep it.
Yeah.
Wait, did you get it?
Yeah, 2011. Yeah.
That's good.
Yeah. So, but how do you know? Like, I mean, do you kind of get a sense of when? I guess for tech, maybe like the market is like saturated, or is it just better to just hold on?
So, I mean, if you are, and this is why, so again, our core theory is that people understand companies and brands, and it's not that actually hard to learn about stock and figure out whether it's going on. We give ratings, A, B, C, D, F. Generally, if you see a company drop from an A to an F, that's a sell signal, right? But for the most part, if it's just going down with the market, it won't trigger a sell. The whole market went down, the whole ocean fell. So I look at it in a very personal way in that, and I'll tell the story of LinkedIn. I used LinkedIn every day, loved it. I was a premium member forever. I owned the stock. And then one day I'm like, why am I paying all this money for premium? This is crazy. And so I canceled my premium subscription. And then I had to follow through on my theory of investing what you like. I'm like, if I'm not paying this, I need to get out of the stock. And so I was fortunate enough to sell when it was still quite high. But I think it's a good trigger, right? I don't shop at Whole Foods anymore. I still hold this up. Anyway, there is, just look at what you're doing. Look at what the people around you are doing. Again, you're meant to be students of pop culture. So what you think of, Facebook took all the money out of advertising. Facebook, Google, Walmart, that's where all the money went. So
That's where
they're going to be, and where the jobs went.
So
And
go
they're
work
going to
for
be
Facebook.
fine for a long time. And yeah, you got in at a good time, so I would hold that. If there was a brand new Facebook competitor that everyone migrated to, and you saw all of your friends stop posting on Facebook and started posting on WeChat, then that would be a trigger.
Or Snapchat?
Or Snapchat. Snapchat doesn't have the money.
So you think it's better to invest in stock or property?
I think the ideal is it's going to come back to you. It's going to come back to where you are. It's going to come back to value. It's risk to value, right? You know, if and what sort of life you want. If you wanted to buy a New York apartment and you're earning $80,000 a year, you're going to be a slave to that mortgage for a really long time. But you know, if you can get it for less than rent, then great. Yeah, you have to think of there is an aid bucket, and I think just as there's like a spectrum of risk, there's a spectrum of asset classes. So you know, cash is an asset, you know, stocks are an asset, property, jewelry, art, like everyone in having an idea of what your net worth is across all of your asset classes is great. Property has traditionally been like the biggest wealth generator for the last 2 generations. I can't make a call on the property market, but it comes down to the individual. But I don't think it's an either or. I think there is, whether you like it or not, if you have a 401k, you're in stocks already. So understand what's in there.
Yeah, quick poll. Who here understands what's on their 401k? Exactly. Do you know what you're investing on your 401k, or you just mark the ideas? I'm just saying that. Like the generic ones that everybody knows. Everybody knows, more or less.
But you know what's inside those funds?
Yeah.
Oh, that's good. So you look them up.
Yeah.
No, I don't.
Oh,
I
okay.
just know generally what I invest in, but I don't know what's inside the fund.
But it's limited dependent on the company, right? Like when you have a 401k, it's usually mutual funds, but you can't go beyond that. So if they only have mutual funds that are like, you know, like also have like a gun thing, you can't actually unload the gun stock from your 401k.
You keep it in cash.
And who here invests? Who here has stock?
Oh, that's great.
That's very good.
Hey.
Hopefully after this,
Well,
everybody, right?
No, but it is one thing, but it is one very empowering thing, and it has been the path to wealth for many, many people. Again, it was actually my boss at the Barratt Institute. I wish someone told me this in my early 20s, but he basically it was like news to everyone. He's like, no one ever got rich through working. And it's true, right? You have lifestyle inflation. Like now I'm an accountant, I gotta have a fancy bag of shoes and blowouts every week, and all of a sudden you're spending more than when you were earning 50,000. You're deeper and you go into this crazy spiral. So you really only can grow through investing, and it may be real estate, it may be beanie babies, it may be a number of things, but having that dedicated, I'm going to put this money to work and put it to work every year. I think it was Einstein that said, compound interest is like the 8th wonder of the world. People who don't understand it pay it, and the people who do understand it profit from it.
Yeah, this more, you had one.
Okay.
I just had a quick one. I think I grew up believing that once you started to earn some money, that's when you started to invest. If you don't have that much money, like I'm a university student, would you still encourage us to start?
I'd encourage you to learn. I think that's the difference, and especially in this country where most people are graduating with student debt, and so they postpone the learning. I don't need to learn about this because I've got to pay down this monster debt over here. And then it just spirals, and suddenly you're 40 and you're like, oh my God, what just happened? So learning ahead of schedule sounds so boring, but if you can knock off one thing at a time, like what is life insurance? You don't need life insurance unless you have kids and investable assets to protect. You don't need life insurance. No one told me that. It's like that's the trigger. I learned it working on my life. I'm like, oh. That once you have kids, that's okay. Now, if you have kids and you don't have life insurance, that's your number one job to do today.
Wait, say that again.
If you have kids and you don't have life insurance, do it today. You can apply online.
Shit, I'm in trouble.
Oh! if you think that you have life insurance through your company, it's worth its run, right? Once you've redeemed it and paid for a funeral, there's maybe a couple $100,000. If you've got a family, it's not going to get you very far.
Hi. If I were to, like many women probably here today, start investing, where would you tell us to go and learn and start our journey? Like, what is the safest?
Hello, GoldBean.com. No, but it depends on what your motivation is. If you just want to set it and forget it, I just want to feel good that I moved my pile out of the savings account and put it somewhere, then it is something more like Vanguard. But there's really not that many places that will teach you. And frankly, even when you have a big pile, it's not in the advisor's best interest to teach you either. So, we say we're an education-first advisor. We do like ongoing storytelling about companies and what's going on in the market. With this, again, wonderful insight that we got from user testing that people really want to learn, but they don't want to read. I really want to get better, but I don't want to spend any time. So if you can spend 3 minutes reading an email twice a week, that's like it's not going to leapfrog you forward, but over a year or two, you'll be in a fundamentally different place from a mindset perspective than when you started.
I was wondering about, you said you transitioned from a full-time position to becoming an entrepreneur, freelancer. What did you do with your investments? Are they still
Use
with that
them
company?
to live. So again, I live on the and I always have lived on the outer edge of risk. So I left home at 18 with no money. Like I borrowed a lot of money to go through school. So my risk profile is probably different from everyone. Some may be more, some may be less. But we basically used, and we're fortunate that the years that we were starting the company were actually good years in the market. So we're able to live off the investments. We've raised some money to go into the company, but have pretty much self-funded it through this, which is terrifying. And again, you have to be honest, like it's really hard when you go from having a big pile and then you put it all into a company, go, oh my God, now I've got a little pile. Again, compared to most, it shouldn't be considered little, but that's just learning what your tolerance limits are. And I talk about a lot in the entrepreneurial community, is that there's this myth of, well, you just start a company and raise some money and you'll be fine. But unless you have a good base for yourself and know how you're going to live, and can you live for a year without any income? That's a pretty good benchmark. And if you can't, then you build this business on the side while you're working.
Sorry, because did you have a 401k with
I
the
had
company?
so many. No, but I rolled them all into an IRA and invested them myself. I as soon as I could take money out of again, outer edge of risk, but knowing what I was paying and versus the returns, every time I left a job, I put it into the IRA and manage it myself.
No financial advisor.
Never. But I would get, actually this was one of my trigger points. Every time I changed jobs, it'd be a press release. And with every press release, I'd get the phone calls from Merrill and UBS. And there was this one guy who called and he was like, oh, hey, Bill, and I just want to know who's managing your money. I was like, well, I do. He's like, oh, someone like you should manage your own money. Oh. It was, but I mean, the first time that happened, I was like, oh, well, maybe I shouldn't be. I was like, well, I get X% every year. What can you do? Oh, well, we can't say what we'll get you. I'm like, wait, why would I give you my money? Oh, it's where such and such a company. It's like, well, that's your sales pitch. That's all you got. It is. I mean, it was really intimidating and then infuriating. It's just like, oh my God, you're calling people all day long with this guilt and shame thing, aren't you? So mad.
I just want to build on what you just said, because 2 years ago I got laid off from my boss. I'm an associate creator and a writer. No, you talk about that.
Everyone gets fired. If you haven't been fired already,
you said it happens. We lost a big account. It happens. This is the thing I want everybody to know. I had a 401k, and let's just say it was a substantial amount of money in it. I made sure I funded it. When I left there, I called Fidelity, and they said to me, I said, well, I just want to make sure the money is there. Like, I don't know what I was checking, but I felt the need to check something. The guy on the phone said, he's like, you need to transfer that 401k into an IRA with your name on it. And I thought, okay, well, Box is a stable company, I don't need to do it. He's like, no, don't you want your money in your name? And I thought, holy crap, I know you man on the phone. Yes, let's take my money out of that company and just lay me off. But the point is, it's like there's no malice or whatever, but the point is like, it's your money. So when you everybody in this room, if you're having it laid off, it's coming, it's like, it's just welcome to advertising, you don't have a job anymore. That's it. You call your mother and say, they laid me off. Your next call is like, where's my 401k and move my money out of that company because it's your money.
Yeah, now I have clients who very proudly tell me that they have 5 different 401ks. It's like, they're paying 5 different companies all of these fees.
And also those companies can go under and your money will go with them. So you need to, as soon as you can take your money, they take your job, you take your money. Go on, your money's gone.
But also understand, I mean, the rules change every year. So talk to your HR department, and just as an aside, we actually sell GoldBean as a HR, as an employee benefit. Agency HR.
Any agency journal?
Not all of it. We are actually in a couple of awesome agencies, but for the most part, they're so slow. I'm just saying they're very slow. It's like, really, this is not happening. Anyway.
There's a question.
Yeah, no, but just one thing to learn is that different companies have different rules. So you might be doing your maximum match, or the maximum contribution to get the maximum match, but unless you stay at that company for 4 years, they can claw back some of that money. I didn't even know that.
I was wondering what you think of Acorns investments. It's like an app,
Yep.
and I just started. Yeah, do you think it's like really legit? Because it's been working for me, and you know they set your own portfolio up and like have this thing called roundups. What do you think?
I think anything that gets you started with investing is awesome. If that's, you know, if that's all that you can put in is that sort of rounding up and it just gets you in that growth mindset, I give it 2 thumbs up. The downside is we only have limited time on this earth, and if you're investing as your primary, well, Acorns is where I'm going to put my money, and you end up at the end of the year with $125, you just lost a year of potential growth, right? $125 isn't going to get you anywhere. And so the average balance on Acorns is pretty low. Again, if it gets you triggered to get you to do something else, is great. But yeah, I wouldn't rely on something like that as genuine long-term growth. Unless, I mean, maybe they'll get, you know, give us, you know, they might do it really hard. Give us your 401k, give us your IRA, give us your savings, you know, if they get into that, but it's small.
Yeah, because I do more than the like roundups.
Okay.
But like long term, it's still
Okay.
I guess legit.
Yeah, no, I mean, it's legit. They have a selection of ETFs. Acorns, Betterment, Wealthfront, all of these companies, they basically have 5 ETFs that they give you the different balances of. Like, it's not rocket science.
So I grew up in a hardworking first-generation immigrant family, you know, American dream, all that, where we actually thought cash was king. So taking on debt, even a credit card, was like a big deal in our family, you know, or just even getting a credit card. So my question to you is, because my dad and I talked about this some time ago, you know, when he could, many years ago, pay off their mortgage, that he had gotten advice from people at work, like, oh no, you could invest that money somewhere else. I mean, this seems to be something that only in America that this would even be a debate, because I would think that paying off debt, even if you've got, let's say, a very low interest mortgage right now, like 3 or 4%, I mean, it was much more back then, is a good thing, like, to work towards getting rid of debt, no matter what your interest rate is, so versus saying, oh, I can make more somewhere else. What's your general view on this?
So, I mean, I don't really like the black and white of good debt, bad debt, but
Right, okay.
a 4% mortgage is considered good. You can incorporate your payments into your everyday life and then prioritize savings and investing. Like, there's a woman I know at Google who, she's been there for 10 years. Like, her stock is worth a fortune. And she's like, I just want to sell my Google stock and pay off my mortgage. It's like, Google stock has gone up like 20% a year every year, and your mortgage is 3%, right? So you just do the relative math around, what is the opportunity cost of that money. But again, it comes back to you. If you feel like you can't breathe because that was your upbringing, that debt is bad, then, prioritize it, accelerate it, but it just means that, you could have been putting money aside to grow at the same time. And, if you think of the tranches as, pay down the bad debt, if you've got good debt, incorporate it, build up a contingency fund for illness, unemployment, whatever it is, having 3 to 6 months of living expenses is good for everyone in cash or very available cash. And then everything after that is, this is money that I can then start to grow.
Take one more so that we can do a little chat.
Bridget.
So maybe two.
Okay, Bridget.
This is a question about GoldBean or maybe like other products that you know of. Do you have an ideal persona or one built up already about like maybe a female in advertising and they're at account director level and then maybe invest through you or with you or under your advice? Granted, I don't know what the ideal persona would be, whatever that is, what they could expect after 12 months or 3 years or whatever it might be. What would that look like?
There's no future facts. It's the shitty thing about this business. Everyone who tells you you can expect X percent, A is not a fiduciary because we are literally not allowed to say that, and B is a liar because some woman could get elected and the stock markets fall off a cliff for the next 4 years. You just don't know what's going to happen. But over the course of history, and I think that's the best way to look at it, if you look at it over 100 years, it generally is around 6, 7, 8%. That is year in, year out. Again, you're going to have years where it's down 30. You're going to have the last couple of years where it's flat. But we had from the last crisis, and this is what really sucks, is that this generation remembers 2008, 2009, a lot of unemployment, a lot of turbulence, a lot of repossession of houses, and then stayed out. Right? If you'd been in the market and got in then, you were on easy street right now. Over the course of the last 7, 8 years, it's been amazing. I'm getting flattened now, but you just have to look across history, and that compounds as well. I think the math is if you had a 5% return over, say, 20 years, it double and a half, if that makes sense. So you put in $10,000 in 20 years, it's 25,000 at 5%.
So all these conversations about saving, investments, and funds have been great, but I just wanted to bring another perspective for people such as myself who don't have any money to invest right now.
Which is, again,
I feel like I'm the poorest person.
No. It's most of the country. It's most of the country. Don't you worry.
So I just wanted to ask you, what are some of the ways that you would suggest we can get ourselves into the habit of saving money and putting money aside? I wasn't brought up, my family always told me save money, but I wasn't really taught how to do it. And it's not my habit right now, so I just wanted to ask you, what are, for example, some of your personal triggers that help you to get yourself to save money and put it aside?
So, having a budget is great. Again, a budget can tell you what you can't afford, but it won't stop you buying it. You're all in advertising. You know the world is delicious and it makes you feel great when you spend money, right? This is what we say every day. So at least you actually have an advantage on some of those triggers because you know the psychology behind the triggers. So really, A, budget, and B, just look at your habits. The things that you forget. I go out for dinner every Friday night. I see friends for brunch on Sunday. And when you say, oh my God, that was $200 every week, right? That's real money in the course of a year. So just, start with your habits, look at a budget, try and reward yourself, but in not necessarily monetary ways, but reward yourself for the small victories. I think I hate saying the words out loud around contingency fund and having a base of money just in case something happens, because I think it's 48% of Americans can't meet a surprise $400 bill without going further, cannot make a $400 bill. Say you need a new tire or something, it's $400, half of the country needs to either go into debt or sell something to pay that bill. So this is a huge problem. This is a massive, massive issue. And so, but little steps